Howdy doody dandy. Not a super exciting one today, but we're talking about Coca-Cola. Why do I say not super exciting? It's Coca-Cola, okay? We know this stock. It's one that it's historically a boring one. But let me just tell you, those boring stocks, they're winning in this market. I mean, if you look year to date, when the whole market's getting schmalammered, that's a word, by the way, Coca-Cola's actually up 2.93%. Coca-Cola is highly outperforming the market, folks. Can you believe it? It's hard to believe. It's very rare that they do. But when you get in times of economic uncertainty, Coca-Cola holds down the fort, folks. It doesn't matter what's going on. Inflation, who gives a crap? People are buying a nice, crisp Coca-Cola. Maybe even some Coke Zero. Anyone had the new Coke Zero? It's quite delicious, actually, for a zero-calorie soda. Let's just be honest with each other. It's curious what chemicals they're pumping in there, but look, Diet Coke tastes like doo-doo. Coke Zero, it's beautiful. But as you can see, obviously, pre-market here, after reporting earnings here, 1.4% up. More positive gain here for Coca-Cola. So let's take a look at these earnings and see where this positivity is coming from, right? So non-GAAP EPS line of 45 cents, beats by 4 cents. Again, look, Seeking Alpha, you're about to lose me, folks. You're about to lose me. When you don't put the GAAP EPS on here, I don't think I can say this guy's name. I mean, am I right? Look at that name. Am I allowed to say that? Is that it feels like an inappropriate word. That first name seems inappropriate. I'm not going to say it, folks. But the revenue line here actually quite nice for a company like Coca-Cola. $9.5 billion, up 10.5%, beats by $570 million. Coca-Cola doesn't post beats like this. They really don't typically. Quite a massive beat for them. And you don't honestly see double-digit growth from Coca-Cola. And again, they're still in a recovery phase, so you have to consider that. Still recovering from kind of the big loss they saw in 2020 in restaurants not being open. So they lost a big portion of their segment, and now they're kind of really posting a nice gain there. So really good. So for the full fiscal year of 2022, the company is expected to deliver organic revenue growth of 7 to 8%. Obviously, something they always talk about, but again, I mean, it's not really all that exciting. I don't get why that's the metric that they really care about. I know it's trendy, but look, I don't care about your organic revenue growth. It's kind of again, it's trendy and it's kind of a phase, folks. Eventually, these people are going to stop caring, and they kind of have stopped caring. Already the steam's dying a little bit, folks. EPS growth of 5 to 6% as well expected. So pretty nice to see. They're expected to generate free cash flow of $10.5 billion. Pretty significant. Pretty significant. So let's see if that happens. Let's look at the press release, folks. Small text. We'll zoom in a little bit for you. Can you read that? Not like you can answer, but hopefully you can. And they're starting off with highlights right off the bat, folks. They're not putting any BS words in there, like this. They're starting off with the highlights right off the bat. Global unit case volume growth of 9% for the quarter, 8% for the full year. Net revenues grew 10% for the quarter and 17% for the full year. Really nice to see that. Organic revenues, who cares, grew 9% and 16% for the full year. Oh, baby. Operating income declined for the quarter and grew 15% for the full year. Curious what happened this quarter. But that's operating income. But when you look, fourth quarter EPS grew 65% to 56 cents. Really nice to see that. But the non-GAAP line declined. For the full year, EPS grew 26%. Quite significant. You like to see it, folks. You like to see it. You got any charts for me, or is it all words? I mean, it's mostly words here, folks. The charts, Coca-Cola, the investor relations team, you could really work on this. I mean, look at these charts. They're kind of garbage. Just being clear with each other. There's some things I want to know. I want to know about your brands. I want to know about all this stuff, okay? And you give me words. You give me words for this. If you need me on the investor relations team, Coca-Cola, just give me a call. I'll be here. I'll be here, folks. I'll move wherever you need me to work on the investor relations team for Coca-Cola. I'll do it. For the quarter, net revenues grew 10%. Yeah, we know that. The quarter includes 6 fewer days, which resulted in a 6-point headwind for revenue growth. Obviously not great to see that, but it's all right. 6 fewer days, and they still posted a great line. So for both the quarter and full year, the company gained value share in total non-alcoholic ready-to-drink beverages, otherwise known as NART. That seems like something that you would have found in the movie Holes, featuring Shia LaBeouf. Splooge, I don't think that's what it's called. I think I just made that up. What the heck is it called? Is it Splooge? There's no way they called it Splooge. They cannot get away with that. But NART sounds like it would be a food that goes along with your splooge. Listen, folks, I got to stop saying this. It makes me uncomfortable. The canceling's coming. Yeah. The canceling's coming. Company updates. Do I care about the company updates? Nothing crazy here. They're just talking about, they're selling the business here. We understand what you're doing to transform the business. You sell freaking carbonated beverages, folks. They're getting into the alcoholic beverage game, though, so let's be clear with each other. Here they go by segment. Revenues and volume. You see organic revenues showing good growth here, except for in Asia Pacific. Asia Pacific looks like kind of a bum quarter for Asia Pacific here. Not sure why, on why that might be, but that's okay. Again, this by segment, or by region, I kind of get, but again, it's just like these are not appealing charts to me. They're not appealing. Is that anyone else's? See, look, this is what I'm talking about. Category performance. Where's the chart on this? There's none. There's no category performance chart. Are you kidding me? Sparkling soft drinks grew 8% during the quarter, 7% for the year. That's what I'm talking about. Trademark Coca-Cola grew 7%, baby. Crack open a Coca-Cola. Coca-Cola Zero Sugar grew double digits for the quarter and the year. Now that's a good drink right there, folks. Sparkling flavors grew 9%. I don't know what that means. Sparkling flavors. Excuse me. Nutrition, juice, dairy, and plant-based beverages grew 11 for the quarter, 12 for the full year. Love to see it. Hydration, sports, coffee, and tea grew 12% and 7% for the full year. Good to see it. Primarily driven by strong growth in body armor. New purchase for them, by the way. Massive purchase. Really massive purchase. Crazy to see. Again, by demographic, why are we talking so much about this by demographic, folks? Capital allocation. The company continued to invest in various lines of the business, spent $1.4 billion in capital expenditures, an increase of 16% of the prior year. But again, they grew revenue by more than that, so nothing I'm too crazy about. The company paid $7.3 billion in total dividends, and it's increased the dividend the last 59 years, folks. This is a dividend king. This is what I'm talking about. This is every dividend you would ever want. Love it. That's why you buy Coca-Cola, by the way. They did not repurchase any shares under the existing repurchase program in 2021. They remain about $10 billion of shares to repurchase, so I don't know if they expected the stock to go down, but it hasn't, folks. They've still got $10 billion to buy, and obviously I don't think they'll buy at these levels, seeing as the stock's obviously right near its 52-week high. But again, the 52-week high and 52-week low are kind of similar because it's Coca-Cola. They don't move all that much. And we saw the guidance, obviously. Nothing really crazy there. Nothing really, really crazy. Can I look at the financial info? Financial results. Okay. Here we go. No, we just saw the earnings release. We don't want that. We don't want that, folks. Or do we? Or do we? Maybe they added it to this. Oh, baby, they did. Don't trust anything you see from the Coca-Cola Investor Relations page because it's not good, folks. You got to click everywhere to find this garbage. Total current assets. Look, it's a good year comparison. I love seeing a full year. I love it. Companies got to do this. Okay, Investor Relations team, you've impressed me. 22.5 billion compared to 19.2, really just due to a growth in the cash position. Cash and cash equivalents up pretty massively year over year. Total assets in general, 94.3 compared to 87.2. Good to see it. I mean, it's good to see growth here. You see trademarks with indefinite lives. It's a weird category, but it grew quite significantly. And I think that's because the Body Armor acquisition right there, actually. So good to see it. Good growth there. Total current liabilities grew by quite a big hunkin' margin right there. 19.9 compared to 14.6. Quite the growth there. But you will see that overall the long-term status did not really grow. So overall equity, long-term debt actually shrank. But total equity at 24.8 compared to 21.2. Nice growth in the balance sheet. Balance sheet's still it's in good shape for Coca-Cola. Look, companies got to be able to pay the dividend for a good margin and continue to grow the dividend, which is yielding 2.7%. I like it. Look, is Coca-Cola at a higher valuation than you might expect? I mean, I think it might be. I think it might be, folks. We're talking about a company for the full year. For the full year, look. Don't worry, we got this. We got this. We got this. Did they list the revenue for the full year? I mean, I think they did, and I overlooked it. I think they did. Revenue for the full year. For the full year, net revenues grew to $38.7 billion. So we're talking about $38.7 billion traded at a market cap of $263. Relatively high for the history of Coca-Cola because we're talking about really around 8 times price to sales. Pretty expensive for Coca-Cola. They don't typically trade these high valuations. On a P ratio over 30 is pretty expensive for Coca-Cola. This is a company that historically trades around a 20 to 25. They're a cheap trading stock. Now, albeit I don't mind this pick. Oh, it's now actually flipped to the negative free market. Time to repurchase the shares, baby. I think that's bad, off of horrible inflation data that we just got. But I think it's trading at a pretty cheap valuation. All things considered. Is it 830? Oh, refresh, baby. Let's look at this chart that's not developed at all. Look at that. Just go right to the negative. But, yeah, I mean... Look, it's trading at expensive valuations. Do I like it? I kind of do. I kind of do, folks. I just like it because this is a good core holding. The dividend's going to be beautiful. You're going to love Coca-Cola stock, folks. That's what I got for you. You hold this thing for 10 years. It's not going to move all that much, but you're going to enjoy a nice dividend, and it's a good rock to the portfolio. Bye-bye, baby.